Good evening, everybody. It's great to be here and lovely to be talking to all of you. So what we are going to be doing today is talk about the Axis new gen product, which is just getting launched as we speak. What I'm going to do right now is dive right in, show you the many of the slides from the deck and share with you what the product is about. Um, so. Now it should show up on the screen. Can you please confirm?
Yes, it's clearly visible.
Okay, perfect. So this is the Axis New Gen India Fund, and actually we are rather excited about this new Category 3 fund. And what is exciting to us about is that to our mind, it's an innovation in the category, in the sense that in the bottoms up exercise that we did in a very recently around 2 to 3 months ago, and where we actually looked at um, India's market bottoms up, number one. We also looked at what will be the growth prospects for the Indian companies in the context of the GDP rise of India over the next 3 to 4 years. What are the industry dynamics of in many of the industries, and in the underlying context, in the underlying situation where India's GDP growth has been powered a lot in the last 15, 20 years with knowledge, with IP, with innovation and technology. Now, this for a long time, we have been hearing that India consumes much less of per capita of everything, be it textile, be it think of a product, any FMCG product, any consumer product, for that matter, even per capita cement or anything, and therefore that has been a driver of growth, and which was true. Having said that, when we were looking at for example, the 5 trillion GDP forecast for India for FY28 by IMF, and then looking at the very interesting feature of India having crossed 3 trillion in GDP this year. That incrementally speaking, from 2 trillion to 3 trillion, what was incrementally different, from 3 to 4 trillion and 4 to 5 trillion, incrementally, what is likely to be different, and inside of that, which industries benefit. So that was the background. Let me and I hope this slide is very clearly visible to everybody. So this is what I alluded to, that we are, all of us are very lucky in one particular sense, which is that we are getting to witness a very historical decade for India. In this decade, India has crossed 3 trillion in GDP. In this decade, India will be crossing 4, 5, and most likely $6 trillion landmark. So, for those inclined more about the numbers, as much as we cross around 5 trillion by FY28, in nominal terms, India has been kind of growing at around 6 to 7% GDP, and our inflation rates have been close to 5%, and then, that getting compounded for 2 years. And that is how prior to 2030, we'll be reaching 6 trillion in GDP, and which is an extraordinary feat. And just to repeat myself, we are lucky to kind of witness this extraordinary decade. However, when you, for example, look at the last 20 years, and I do remember being present at one NASSCOM McKinsey event in '98, when McKinsey team announced that Edge versus Indian IT doing $3 billion in revenue. The forecast is India will do $50 billion in revenue in Indian IT industry in 2008. And then there was 2002 report saying 11 billion will become 60 billion by 2010, 2005 note, the NASSCOM McKinsey report saying that 21 billion will become $150 billion. And finally, what is there on your screen, that the Indian IT industry, which was roughly around 147 billion, 145 billion in 2015, is forecast to become between 350 to $400 billion in 25-26. India's pharma industry, became 10 times in the last 20 years, and it is slated to triple by 2030s out. Similarly, in my younger age, I recall all the chemicals and specialty chemicals for years together were single-digit PE stocks, as versus that On an average, there are 35 peach stocks today. And there's a reason for it. Reason that India has actually gone up the value chain, gone up the complexity curve, and then making much more complex things. And there is a lot more tailwind that India is having on account of global procurers, trying to de-risk their supply chain, something that we have heard a lot about over the last 1 year, last 2 years. The China plus one policy. And of course, there's the PLI angle in many of these as well, including specialty chemicals. We are also lucky in that sense to witness one extraordinary transformation, which is that it was last time, more than 100 years ago, that we transitioned away from horse-pulled, vehicles, if you will, to internal combustion engine and ICE engine. And lifetime, what we are witnessing in the 2020s is a very powerful shift towards EVs, and it's a lasting trend which will be there for another 15, 20 years as we transition more and more and more towards EVs. So in short, when you put all of this together, and not just these four industries, but more, is that very powerful trend has begun in India for almost 20, 25 years now, where the incremental GDP growth is meaningfully contributed by knowledge, innovation, IP, and technology. And that is what, as we in our research, look forward, that is what our growth is going to be driven by. Now, tech and IP and knowledge is there, it has been there and so on, but what it needs is few other very powerful ingredients. And India can supply those. Number one, powerful is that people, high quality entrepreneurs who are tech oriented, who are technocrats, who can leverage the knowledge in IP. So what we are finding is that Indian entrepreneurship, as probably pioneered early by maybe Narayan Murthy's and Azim Premji's and so on. But the reality is that when you look at last 10 to 15 years and number of Indian companies that have become billion-dollar companies, very diverse companies, people have come from very diverse background, no longer bonded to a family to be successful, but pure entrepreneurship, that is one. And that trend has been actually further exacerbated by what we see in terms of unicorns that have been getting born almost every week in India, bearing maybe last 3 months because of the meltdown that we have seen, or the meaningful correction that we've seen, which was probably warranted. But all of the last few years, we have seen a number of unicorns getting born, again, a testament to the Indian entrepreneurship. So there are these global technologies and innovations and IPs that are available that are getting exploited by entrepreneurs. What they need as well is good quality capital. And what has changed in India over the last maybe 20 years, and if anything, this trend has got substantially intensified in last 5 to 7 years, is availability of the funding ecosystem, private equity, venture capital, and so on, and capital market. So when there is a bright entrepreneur and there's a great opportunity, then business opportunity, there is opportunity for the business to get built because you are going to get funded, and that's very important. So there is another ingredient in addition to the entrepreneurship. And lastly, another ingredient that in a country such as India, I would argue, is needed, which is a very powerful government backing and the business mindset of the government. In the sense that, when was the last time that all of us recall government was giving an annual update about what is our ranking on ease of doing business and so on and so forth, or number of people who are now been digitally enabled and so on. In reality, tens of thousands of businesses in India have gotten built simply because we have a very powerful digital backbone. KYC can be done, and money transfer to people because of UPI and Aadhaar has become much less risky. In fact, it is very smoothly enabled, which is a very powerful a tailwind that has been now been built. So when you put all of this together, We did a bottoms up exercise when you looked at all companies in India, more than 1,000 crores in market cap, and the around 65 industries that they belong to. And our research was that which are the industries that are going to be most beneficial as the GDP goes from $3 to $5 trillion through, and that's not very far. We are in FY23 already, and we are looking at FY27, 28. So it's not too far fetched in the future. And there are a number of industry research, in various industries that kind of can tell us that over next 3 to 4 years, which are the industries that are looking more interesting. With that in mind, we narrowed down to these 7 industries where the knowledge, IP, innovation, technologies in banking and fintech, in tech and IT services, the healthcare and biotech, chemical, specialty chemical, internet e-commerce, automotive, mobility services, and omni-channel retail. There will be many industries, to be sure, because our industry is India as a country is going to be almost doubling our GDP before the decade is out. Then there are going to be many industries. Though in our view, these are the industries where there is going to be a lot of scale. There is going to be good quality ROC, ROICs, profitabilities. High quality management teams are available to exploit the opportunities, capable of taking their offerings global, cross-border and so on. In addition to the fact that we are all these industries are going to be a very large domestic market. Obviously, in continuation with the high GDP growth, there is also going to be what goes hand in hand is much higher per capita disposable incomes. India as a society, we are going to have lot many more prosperous families and households versus with every passing year. And so what the new gen, and so what the fund is about, it's actually India which is new gen. Incrementally, India's GDP, it is where it is coming from, new gen industries, and we have seen the evidence of the past 20 years. In number of industries, it's actually as versus we consuming more plastic per capita, more textile per capita, more cement per capita, and that will continue for sure. And that is what has powered India's GDP meaningfully also. Just that incrementally speaking, we find that knowledge-driven and IP-driven industries are actually going to, have more powerful an impact. And good news about these industries is that the number of players, which are in the pipeline, in addition to the already who are there, they provide very interesting, rather interesting array for investors to to pick from. There is enough selection opportunity for somebody to build a portfolio, and that is what we are excited about. What I'm going to do is, in the interest of time, I am going to skip the individual industry slide, which is about however, we have all seen how banking in India has dramatically grown, and then how valuable our banks have become, and the impact that fintechs have been having on diverse sectors, in terms of payment, in terms of lending tech, in terms of pay techs, and insurance tech, and insurtech, and so on, and enabling. I mean, there are literally few dozen sub verticals here when it comes to payments. So very large space, and looking very exciting. India's IT services and IT products and so on, our engineering services. Again, we have been having ongoing numbers to look at, and as companies report to us that, as for example, TCS CEO said that after 25 billion revenue, our next target is we are looking at the next 25 billion. So so industries forecast to grow to $350 to $400 billion by 25-26, and again looks pretty exciting, with high profitability, high cash flow generation, high ROICs. Healthcare and biotech, again, as as country gets prosperous and our healthcare industry gets more and more informal, we are seeing rapid growth in this industry. And plus, of course, there's the export angle. In addition to, what companies have been doing, focusing a lot more on innovation and IPs and more in licensing and out licensing deals, spending more on R&D, very healthy, M&A pipelines, and integrating themselves more and more in the global R&D supply chains and so on. So again, exciting growth ahead for them. All the companies that you see on your screen on the right hand side, just to repeat myself, they've become 3x in terms of P multiple. 10P companies and 12P companies have, P is almost triple, and for the right reason. Over the period of time, these companies have pursued far more complex chemistries. They have become more scale oriented. And when we speak to these companies, what they talk about is that, the edge versus doing number of pilots by large global buyers over the last, 5 years, 7 years, 10 years. Currently, the conversation is that whether India can supply more and more. And all of them, therefore, the reason you see them to be in a high capex cycle, high continuing capex cycle, and so on. So exciting growth ahead for them. I mean, I will not even spend a minute. All of us have seen extraordinary numbers, and plus, as we transition from 4G to 5G, and our data costs continue to be one of the most inexpensive in the world. And as we get more people on the digital ecosystem, this space is it will continue to be a high growth space. We are transitioning, and there will be new winners and some losers. But this space is exciting for the many of the incumbents as well as the new players. Again, in India, we see our behavior has changed versus what we were doing, even 6 months ago, 1 year ago, 2 years ago, being willing to buy our critical pharmaceuticals from e-pharmacies, our groceries. Now we prefer to order that will come in 1 hour as versus ordering on Amazon, which will take 2 days or 3 days. Number of things, that are changing, and even company like Titan, for example, will tell you what is their digital and as a proportion of sales and how is that changing, which is very interesting to know that for the breadth of the industry, the conversation is whether Nike is going to be a brick and mortar company in addition to being a digital native, and how quickly they want to grow, and so very dynamic place ahead, and looks exciting to us. So in New Gen India, what we want to do is we want to offer investors a choice to exploit this market inefficiencies and participate, help our investors to participate in the structural changes that are taking place. There are a number of opportunities available. What we are doing that in this fund is that in our view, the 7 industries that we are going to be focusing on are the ones where in our view they're going to be acting as a kicker in terms of a portfolio return potential. In addition to that, we will be investing between 0 to 30%, up to 30%, in pre-IPO situations. Not unlisted, a company that doesn't plan to do an IPO, or a company that might be doing IPO sometime in the future but not clear. We are interested in only those where IPO is clearly thought out, bankers are already in the room and conversations are on, and and IPO will be taking place inside of 1 year and so on. What we think in this particular situation will help is the way valuations have corrected in maybe last 1 year or so, after the debacle of Nike listing and Policy Bazaar and Zomato and many others. There has been a crackdown on strong valuations, and we also hear that in early stage, or rather the late stage investing, there have been many down rounds and so on. So we think that if the valuations correct there, it will be good for those who are interested in doing the pre-IPO investing. So these are the 2 kickers which we think will really help the returns of the fund, and that essentially what the fund is about. That incrementally as the nature of India's growth changes, there should be a product to help the Indian investors keep pace in that new reality, both in the listed space up to 70 to 80% fund where most of the action will be and will be very liquid fund, but also participate in companies which have got incubated, last 5 years, last 10 years, last 15 years, who are almost ready to, almost there with regard to doing an IPO and make that product available. So that is what we want to provide. We will make sure that, we work with only those companies inside these industries where the operating dynamics are rather beneficial. After doing this exercise, the rest of the investing filters do apply. We are valuation conscious, and it's not we are not necessarily going to go after very high P stocks and just for the vanity. It's a very value conscious mindset which will take more work, but that is what the inclination is towards. So with that, I'm happy to pause. I think I have taken the time as allocated to me, but happy to elaborate any on any particular point here.